Hi, this is a quick overview of round two. We see in year two that we have a number of teams in the top 25% quartile of performance on current rounds. And we see that we have a range of 79 to 702 on the current points. The profit margins, again, like I had said last class, you need to get your profit margins up at least above 40%. So if we see some of these lower placed teams here, only one team is below 40%. So I guess that's the one team that didn't listen to my last review lecture, simulation review, I should say. But now we have everyone except for this last team above 40%. But every round you should go up about 3 to 5 gross margin percentage points. So if you're not, so for round two, you should really have been around 45%. And round three that we're going into, you should be more around 50% gross profit if you want to stay within the top half of the percentile performance profit margin. And this is what investors expect. If you watch the stock market, any stock that doesn't come out with improving gross margin percentages or revenues or profits, the stock tumbles, crashes. So stock price here, again, we have a pretty big range. And again, the stock price is closely related to profits and profit growth. I mean, sales are important too, but if you have sales without profits, you're not going to have a high stock price. So you need to have, it's about generating revenues and profits, but most specifically, profits. Okay. So if we look at total points, and we go back to the grading of this. Oh, by the way, the next round is due on January 13th here. But if we look at the grading of this assignment, you need over 2,500 points to get the full 15 points for the assignment. So some teams are, it's only a second round, and some teams are more than halfway there. In fact, every team here is halfway there or better after 2 rounds. So although as you keep playing, the game does become more challenging because other teams become more competitive. They learn what they're doing wrong, they improve, and customers start expecting more from the cars. So the dynamics and the strategy does keep moving along. Remember, the operational profit margins will decrease mostly on how much you spend on advertising, and then the earnings per share and net profit margins would be after taxes and interest on your company. Everybody gets taxed at the same rate. Okay, so we go all the way down to the net profit margin, and here again, you may have a good gross profit margin, but if you overspend on advertising or overspend on interest, then you could wind up on a lower level. And again, remember, these per share statistics are all influenced by the amount of outstanding stock you have. So if you are too aggressive in borrowing capital or raising equity capital from issuing stocks, then that's going to hurt your per share statistics. Okay. So if we look at the industry charts here, again, we see that a nice improvement in overall revenues from one round to the next, and we see that we have 3 leaders here, actually 4 leaders in revenues. I would say 5 leaders in revenue. But remember, for example, we have this leader in revenue here, but they're not the leader in profits. So this is points, I'm sorry. And we'll go back to profits in a second. You can see that points have been reduced from the first round. The first round is the easiest round to make points because you're correcting for the bad management the year before. So it should be relatively easy to make a lot of points in round 1. But now round 2, you're competing against yourself, and that gets a little bit more tricky because it's not so easy to beat yourself. Okay. So we do have that range of stock price here. So we see that companies' different strategies are performing differently on stock price. And sales are a little bit tighter, but still there's dispersion there. And earnings per share. So the profits, we see that this company, AIC, is still in first place in profits. And we had a team here, it looks like only one team really declined in profits. And that's a bad thing. Investors really hate that. And that can really affect your performance as a company. So be careful of that when playing the simulation. All right, so if I go into the demo, and we're in round 2 here, and I'm going to do a quick. Now, as you notice, as you move through the rounds, the all the customer expectations start to increase. And that means it's going to lower, if you make the car the same way, you're going to lower your profit margin. So here my profit margin is 47. I should just do a quick check, my overview, to see I left off my gross profit margin at 47 last round. So that's not going to be good enough this round. So I'm going to have to pull back on a couple of statistics here to try and get above the 47, because if I don't, there's no point in redesigning the car if I can't show an improved profit margin. And sometimes I may have to go below customer expectations to achieve that, which means that will lower my demand, but I'd rather sell less cars at a profit margin than more cars at a loss. And that's pretty much, the philosophy of most companies. No one wants to sell anything at a loss. Why make it then? And a lot of students have this misconception that companies are in the business to make the best product possible at the lowest price, or even at a loss for customers, to keep customers happy. And that's simply not true. Not true at all. Companies are in business to make money, and they do what they can to make the most money possible, hopefully within a legal framework. They're doing it legally. Although some companies do take shortcuts, but we saw at Volkswagen and some other companies in quality. You may notice this in the supermarket. You go to buy something in a supermarket and you're surprised by the lack of quality in the product. And remember, I'm just throwing some numbers here in the forecast. You forecast too aggressively, you don't sell all the cars you expected to sell, you may have an unexpected loss. All right, so here's the marketing page. I'm not going to sit here and fill this out while I waste your time. I'm just going to do this behind the scenes, and I'll come back in the production page. Okay, so now I'm in the production page, and again, I'm being careful not to buy more plants than I actually need. And I see, a lot of students occasionally do that. They buy many more plants. I don't know why they buy a plant when they don't actually need it for their capacity for their manufacturing. So, and again, see, I had leftover inventory last round, and that could cause a unexpected deficit. If I don't sell everything that I plan to sell and receive all the profits from it, that's how you go from surplus to unexpected deficit, because the pro forma financial statement is an estimate, not a fact on the financial page. And now I'm going to make some more operational investments because I want to have that cost reduction that comes from it in the following rounds. All right. And I also want the points for spending in reinvesting in the company. Okay, so I have a surplus of 10 million. So I'm going to actually issue some additional debt, just in case I don't want to have an unexpected deficit, but I am going to buy back a little stock to help my per share figures. All right, so I have a $12 million surplus. Let's hope that's enough. I'm going to complete the round. And my results for year 3 are 500. Remember, there's 6 rounds, so I want to do at least 425 points a round to get me over the 2,500 points. So being over 425 points, I'm doing good. I did have a surplus, and I got 100 points for that, 100 points for my operational investments, and I was able to increase my profit margins by 9%, and 7% on the operational, and 5% on the net, so I earned points for that. My debt did grow, so my quick ratio... Actually, my debt wasn't too bad because I increased my equity more than my debt. But my quick ratio was down. I must have had, because of the assets, I bought a lot of assets, and that affects my equity multiplier. And my forecast was a little low on economy. I could have sold more economy cars. So basically the best thing to do after you complete the round is check your assessments for advice on how to do better in each of the categories, and then check your individual performance chart to see at the very bottom, you'll see here, sedan. I could have sold 3,280 sedans, but I only built 3,000. So I left 280 sedans on the table that I could have sold, and they went to another competitor. So sometimes you might say, how did he sell so many cars? He didn't advertise as much as me, or his cars weren't as better built as me. Well, you know what? He may have had extra sales from sales that left your company because you didn't make enough production. And here you'll see that I had excess inventory on the economy class. That's why my surplus wasn't as big. It should have been at least 10 million, but it's only 6 because I had those about 400 vehicles unsold. Okay, so that is my quick review of what you could have done in round 2. Now you're in round 3. So continue with that same idea of moving forward in the simulation, and I will review the results and show you what I would have done in round 3 to remain competitive. Okay, thank you and take care. And remember, the next simulation is due on January 13th at 11 p.m. and good luck.